Hello investors and traders, and welcome to the weekly market report. I'm 𝐁𝐞𝐚𝐫, and before we get into the analysis of the markets, let me first point out that we offer a 7-point trading checklist to our members, and we're also making this available to the general public. If you'd like a copy of this, you could either get a screen grab right from this recording. I give you full permission to do that, or you could email us by going to our website and scrolling right down to the bottom. You can click on Contact Us and fill in your name, your email address, and just request a copy, and we'll send you the PDF document. If you have any other questions for me, you could also put them in the contact form. Or if you would like a free 15-day trial with no strings attached, no credit card needed, you could also go down there and request that, and we'll be more than happy to accommodate. Now, when looking at the charts, I always look at the type of candle first, then I analyze the volume, because the price tells us the direction of the price action, but the volume tells us what the force is behind the move. So if the volume is increasing on the way down, that's telling us that the sellers are motivated. If the volume is increasing on the way up, it's telling us that the buyers are motivated. And when we see a drop in volume on the way up or on the way down, that tells us that the force behind the move is starting to wane. So keep this by your side when you're looking at the charts. It's absolutely fine to do that, and you'll see exactly how I analyze the markets, and you'll see why we have such a high percentage of accuracy. This week was very close to a perfect forecast. You could see that these diagonal lines right here represent my forecast from the weeks before. And last week on DIA, I did say that we would go up, and you could see my price target was 432.62. We hit that like a champ yesterday, and now we're seeing a pivot, which is a lower high and a lower low. So if you have been following along with my weekly reports and my midweek reports, you'll know that I talk about the ABCD pattern. What is the ABCD pattern? Well, when you have a pivot at the top, like you see here, that would be point A. And you could see as the market dropped, we did finally pivot here, and you could see that we could put the B right there. Now, as the markets are pivoting lower, we could now put a letter C, which gives us the opportunity to complete this pattern. And I do believe that we're eventually going to see a lower D. That's usually what you see in an ABCD pattern. But I'm going to be conservative and put my downside target very close to the pivot point B down here, because I think we could see a test of that. If we go lower, and I think we could go lower, then we're off to the races to the downside, as I believe the bear market is approaching very rapidly. So my downside target on DIA is 424.31. You could put that right there and follow us next week, and we'll see whether or not that target hits. If you look down below, you will see that we have a pivot right back down on the CCI. We did not cross over the momentum line, so we do have a pivot to the downside, which adds to the downside pressure right there. So again, downside target on DIA is 424.31. If you look at IWM, came very, very close to hitting the target yesterday, but guess what? As I zoom in here, you could see that we do have a lower high and a lower low. Therefore, we are going to draw another ABCD pattern here, where we have a pivot point from back here. We have the B at the bottom here. We do have the pivot now that we could put a C at that particular point. And now I think we're going right back down to test the low from this point right here, which was December 20th. So downside target on IWM is now set at 218.56. Moving on to the Qs, which is QQQ, this basically represents the tech sector. You could see that we hit that target at 527.18. Again, like a charm, we hit that perfectly. Now we have the pivot lower. with the oscillators now crossing back down the momentum line on the CCI. You could see that we have a low B point right there, which is where my target is going to go for next week. Now that would be an extreme move to the downside at 511.27. Looking at SPY, this is the S&P 500 ETF. You can see that the green dotted line represented the 1.4% increase. That was the price that we had set for the 1.4% rally in the year-end rally, also known as the Santa Claus rally. But guess what? Came shy of that. A lot of the analysts were talking about a 1.3% rally. That's already been reached. 1.4% would have been 603.01. Came in just pennies shy of that. And look at that. We are pivoting lower. So my downside target on SPY is going to be right back down here by the end of that window, which is January 3rd. I believe we're going lower to 587.42 on the S&P. And if you take a look at the VIX, you could see that we are, in fact, pivoting higher right here with this green candle. This is an inverted hammer. It's bullish. We did hit my downside target on the VIX at 1590. There was a very small gap right here of 9 cents that filled right here on this red candle. So now that that gap is filled, I am going higher, and I do believe that we're going to break out through today's high on the VIX up there at 1921. So stay tuned for that. If you're following, again, we have a very high percentage of accuracy with regard to our targets hitting. It's 82.2% of our targets hit, and you could just follow along each and every week. A lot of people use this report, although it's free, it carries a lot of value with it. A lot of people use the reports to trade against, and they put on positions in each of the markets accordingly, especially our option traders. Now, I'm putting this report out just a little bit early because today from 6 to 7, we are having a rapid fire stock analysis session where my goal is to analyze at least 40 to 50 stocks in the hour. I'm going to offer some trading strategies along with those price targets that I set for each and every one of the members that submit a ticker symbol to us. So it's not too late to enroll in your 15-day free membership if you want to take advantage of that. Again, that starts at 6 p.m. Eastern Time on this Friday, the 27th. And I'm doing the rapid fire early because next Wednesday is New Year's Day, and we will not be having the rapid fire like we usually do on Wednesday. So we're doing it early for our members so we don't have to postpone that at all. Hope you could join us. So if you are getting value from these free videos, please like and share. And above all, please subscribe. We had a good number of people, new subscribers, come in last week. Thank you so much for that. When you like and share and especially comment, you're generating activity on the algorithms that puts us on the menu. And that helps us quite a bit to get more exposure. So thank you for that. This is the last weekly market report for 2024. Next week will be the very first market report of 2025. And with that, I want to thank each and every one of you for, again, helping our channel grow. We're approaching 12,000 subscribers, which is a record for us. That is quite a good number of people, and we really appreciate your watching this each and every week. So happy New Year, and I'll talk to you in 2025. So long.